Hi everyone, and welcome back to Start Here, the very special mini-series within Sugar Mama's Fireplay where I answer your real-life money questions with practical, empowering steps to help you move forward with confidence and finally get started. Today's question comes from a listener who wrote, "Hi Canna, my parents have agreed to gift me and my husband a significant amount of money to help us buy a home. However, we're still in credit card debt, so I don't want to take this money quite yet, but I'm worried that they will be disappointed in us. What should I do?" All right, first of all, to this listener, thank you so much for your honesty. That wouldn't have been an easy message to write. Questions like this often carry so much shame and guilt, especially when we feel like we've let other people down that we love so much and that those people are really trying to support us. But please know this: the fact that you are asking this question tells me that you've got amazing integrity, awareness, and of course, maturity. You really want to do the right thing, I can tell this. And sometimes it's not that easy, but it is definitely a sign for someone who is ready to take serious control of their financial growth. So, right now, I'm going to talk you through how to approach this with your parents, both practically and emotionally, and of course, financially, and how to help protect your finances, protect your family relationships, and your own peace of mind. So, let's waste no time at all and get cracking. All right, step one. Can we just take a moment to please acknowledge the emotions first? Before we talk numbers or loans, we need to start with the feelings because family and money are very emotional topics, and it is really normal and natural to feel conflicted. You're grateful for your parents because they really want to help you get a foot in the door on the property market, which is so hard, and it's an amazing blessing. But at the same time, you're torn because you feel really anxious and probably even a little bit ashamed because of this credit card debt that you've been carrying. But what I want to do is reframe this guilt. Your awareness of this situation means that you really do care about doing something and doing something properly and outgrowing your old toxic habits that got you into the credit card debt in the first place. You are not rejecting your parents' generosity, despite what you might be worried about, but you're actually honoring the gift by wanting to be financially responsible and ready to actually use this amazing and very generous gift wisely. So take a moment to just be kind to yourself, please. You're not behind. You're not broken or damaged. You're not dirty for having this debt. You're actually being really responsible because you're doing something about it, and you actually have been doing something about it before your parents have offered to give you this money. And that is the mindset, not the money, that's actually going to help you get ahead successfully. All right, so now that we've parked away those emotions, let's go on to the next steps, and that is your parents being honest and transparent. Now, I will admit this part may feel incredibly uncomfortable, but it is essential. Honesty is always the best policy. You have got to have an open and honest conversation with your parents. And I know it's easier said than done, so I'm going to suggest that you start at something like this. Mum, Dad, we are incredibly grateful for your generosity here. We know how hard you've worked and how hard you've saved and what this means to you. And it actually means the world to us to be able to be given an opportunity to have our own home. But before we can even think about possibly accepting this money, we want to make sure that we are in the right position to use this money, your money, this gift, wisely. Now, to be open and honest with you, we've got a little bit of credit card debt, and I would share with them exactly what it is and how much and how you got it. But let them know that you have already been working on paying this off before they even offered to give you this money, assuming that is the case, of course. Now, once that conversation is done, you've put it out there, I am confident that you will feel so much better about yourself and that your parents will know that you are ready to handle the next step the massive responsibility that comes with home ownership, and you'll do so responsibly. Now, it is this level of honesty that shows character. It also builds important trust or solidifies that trust that you already have between you and your parents. And in many cases, it can often strengthen that family bond. And who knows? Your parents actually may even prefer that some of that money that they're about to give you goes towards clearing that credit card debt first and completely, even if it means you can actually move forward sooner and stronger into the property market. So you may find that they actually appreciate your transparency here, and it actually outweighs any sort of form of disappointment in your life. So please have that conversation sooner rather than later. Step number 3 is to focus on clearing that debt as quickly as possible. We've got to look at the practical side now. Now we've had those conversations within ourselves and with the parents. Let's look at clearing this debt. Now, whilst your parents are being generous, your most important gift to yourself right now is financial independence. And that starts with being toxic debt free. I'm talking credit card debt, I'm talking car loans, I'm talking personal loans, I'm talking buy now, pay later. So you need to sit down and create a plan to clear this credit card debt or credit card debts as quickly as possible. So I recommend using my hit list strategy where you list out all your debts with the smallest debt first to the largest debt. You make a note of all the interest rates that you're paying and you have minimum repayment plans in place for each of them. And you focus on hitting or paying off the smallest debt first and working through. Every spare dollar you have, bonuses, tax refunds, any small windfalls along the way, I don't care how small it is or how big it is, it goes straight towards paying this off. The quicker you can pay this off, the quicker you're going to be able to get your foot in the door on the property market. And of course, go through your budget and reduce any unnecessary spending so that you can use up that extra money and make extra repayments towards this debt. You've got to remind yourself this is short-term pain for long-term peace. And once that debt's out of the way, oh my gosh, you are property hunting. That's exciting time. So use that as your motivation to be aggressive in becoming debt-free as quickly as possible. And as you are doing this debt-free work, please spend time also reflecting on how you got into that debt in the first place, how that debt built up. Was it lifestyle creep? Was it something that happened out of the blue, a period that was very stressful or an unexpected expense? Or was it the fact that you don't actually have a budget or you don't know how to stick to a budget? Please make sure that you understand why you got into this in the first place so that you never repeat history. Whatever the reason may be, this is your opportunity to understand it without any shame so that you can make sure it never happens again. And self-awareness is always the first step to prevention. Okay, step 4, get mortgage ready the smart way. All right, the moment you have cleared the debt, or even actually if you're getting really close to paying off this debt, it is time to get mortgage ready. Before you accept any family gift, I want you to go and speak to a mortgage broker, an experienced mortgage broker. Now, if you want a recommendation, of course, you're welcome to use my mortgage broker. There's no incentive for me to recommend him whatsoever. I just recommend him because he's so good, so reliable, and so honest. But regardless, you've got to speak to an experienced mortgage broker that can help you. You might be thinking, oh, hang on, isn't that a bit soon? Like, why? Should we slow down a bit? Well, the thing is, a mortgage broker will help you understand how much you can safely borrow, so that you can then work out, okay, what's our budget? Are we looking at an apartment? Are we looking at a townhouse? Are we looking at a house? What areas are we looking at? They'll also go through all the detailed documentation that the bank are going to want. So they're going to want to see genuine savings statements. Now, this is important because your parents are giving you money. Now, and the bank will recognize that, and I'll come to that in a second. But the thing is, they need to see that you and your husband are able to stick to a budget and regularly put money aside so that when it comes to lending this money to you, that you will be able to meet the mortgage repayments comfortably. This is, I know gifts are wonderful, but it doesn't mean the bank will just happily hand money over. They need to see an element of self-control and discipline with your own cash flow. Yes, they will take into consideration the debt-free journey that you've been going on and factor that into the story, but they need to see consistent statements. This is typically around about 3 months of genuine saving statements. And of course, the mortgage broker is going to help show you what your borrowing power is once you are debt free. Because if you are still carrying credit card debt or even things like HEX debt, that's actually going to impact how much you can borrow. It's going to reduce it. So they can run some numbers and show you, well, if you've paid off all your credit card debt, you can borrow this much. But if you still have, say, $10,000 worth of credit card debt, you can only borrow this much. So it's going to give you some really important clarity and boundaries as to what your property purchase is going to look like. And therefore, it's going to go through very smoothly. And importantly, they're going to talk to you about how this gifted deposit actually affects your loan application. And, in most cases, lenders these days, because there is so many, Bank of Mum and Dad contributors here, they'll need a letter from your parents confirming that the money is a non-repayable gift, not actually a loan. And that is why clarity and documentation here are so incredibly important. It's going to help create a greater sense of peace of mind for both yourself and your parents. Now, this next step is more of the legal details, and that is getting legal advice, basically, for everybody's protection and independent legal advice. This is something that a lot of families overlook, and recently has been in the media. It's backfired a few times and in a few different ways, but it is so important. So before any money changes hands or sides between you and your parents, you've got to both get separately independent legal advice. Now, this is not because anyone's being difficult or distrustful. It is just simply to protect everybody involved and have no regrets. Look, life happens, relationships can change, and your parents may face health issues, expensive health issues further down the track, or even aged care costs, which are very expensive, or even their own form of financial hardship. And without any sort of legal documentation in place, that very generous gift that they're about to hand over can end up becoming a really nasty dispute further down the track. And this is where lawyers really are worth their weight in gold, because they actually help set some really clear terms and conditions around this gift. For example, what happens if you and your husband separate? Does that mean your husband is entitled to half this money? How's that going to work? What if your parents, need that money back for whatever reason? Or how's the bank going to treat that gift when assessing that loan application? This is definitely not about doubting anyone's integrity, but it's really about creating that peace of mind, boundaries, and clarity where everyone agrees upfront before proceeding ahead. And then step 6, and this is really important, and no one really talks about this, and it's something I did before I bought my first home, and I'm so glad I did, and that is a dress rehearsal for your home ownership. So, as I said, it's one of my favorite pieces of advice, for anyone that is buying a home or about to buy a home, and that is, start your own practice run, dress rehearsal for a home ownership. So what that means is working out what your future mortgage repayments are going to look like, both principal and interest, of course. And then you start paying that exact amount into a separate savings account each month or each week or each fortnight. Obviously, you have to, if you're paying rent, you can't necessarily do rent and a pretend mortgage. You will just do the difference between the two. But what this really simple idea is, it helps create 3 powerful things. The first being you're able to actually prove to yourself and the bank that you can handle the mortgage repayments, the responsibility of the mortgage repayments. Number 2, it actually helps you build up some extra savings, which can then help, cover the costs with buying a home, like, stamp duty, conveyancing, and obviously all of those moving costs and setting up costs. And then thirdly, it actually trains you to manage your budget and stick to it. You can start to see how your lifestyle may need to be adjusted because you now have the responsibility of a mortgage coming into your world very shortly. And whilst you're doing this dress rehearsal, I also recommend upping the ante and including a bit of a stress test to your budget. So you would, as you're going through this process, putting the money into that separate savings account, your pretend mortgage, you would then say to yourself, okay, what happens if interest rates go up by 3%? Not 3 interest rate rises, a 3% interest rate rise. Could you still cope financially? if this happened, again, this will let you see, okay, all right, perhaps we won't borrow as much, or perhaps we'll wait a little bit longer and have a bigger deposit so we don't have to take on so much. This is really important. And if you followed my advice, gosh, back in like 2000 and say 21, before those 13 interest rate rises happened, you would have been so glad you followed my advice, because you would have been able to survive, the painful rise in cost of living. But this is really, really important. I think you're a fool if you don't do this. And for not just this couple, but for everyone else who's about to take on a mortgage or a new mortgage. And the other thing I would also say is, I don't know your situation, I don't know how old you are, but I would also ask yourself and each other, how would we, I guess, navigate changes in our lifestyle if we had a home? Would we be able to still service the mortgage if we took time off to, say, have a family? Or if we wanted to take a career break and, say, focus on some additional studies and work part-time, could we still afford to keep the home, pay the mortgage? These are important questions. You really want to explore all the what-if scenarios so that you're going into this home ownership eyes wide open. And if you can answer yes to all of those questions and see the power of doing a pretend mortgage repayment dress rehearsal, then you're not just ready to own a home, you're ready to actually keep it, and even better, pay it off, and then start investing and diversifying outside of the home. And then finally, step 7. Please do this. Build some emergency money, a separate emergency savings account. So alongside your dress rehearsal, you've got to start setting aside some emergency money. Ideally, you want to have enough money to cover 3 major but realistic emergencies. Now, there's no magical formula. I know some people like to say 3 months worth of savings or 3 months worth of income or 6 months worth of expenses. Everyone sort of varies with this, but you really do need to think about, what does your situation look like, and what is a real risk, and what are the costs of those risks happening, and 3 of those things happening simultaneously. This will give you a much clearer idea as to what is realistic for your situation. Now, this will vary. Some people have lots of annual leave and sick leave accumulated, and they've got income protection, and they only have a small mortgage, and their kids are all financially independent and out of home. They may not necessarily need as much emergency money as someone like myself, where I'm self-employed, my partner's self-employed, so we don't have annual leave or sick leave. We also have 3 young children, so we'd need help looking after the kids. We have a mortgage, so I would need a lot more emergency money than, say, that other couple that I just referred to. No one knows what is right for them until they actually sit down and look at their numbers. And, I've explained in my book, Mindful Money, how to actually do this properly, taking your time, going through all the numbers and doing, crunching the numbers. But please make sure you have emergency money. And once you have a home, you can put that emergency money into your redraw facility or an offset account, so that it is actually helping reduce the interest, but is obviously still accessible at any time if you were to experience an emergency. And if you did experience an emergency, you would obviously always go and top it up as quickly as you could. And, this is a buffer for your safety net. It protects you from having to rely on credit cards or ever getting back into debt again. It is a non-negotiable. And then finally, step 8, and that is to focus on shared values and gratitude. I want to, finish this episode today by reminding you that this is an amazingly generous gift from your parents, and it isn't just financial. It's also highly emotional as well. It is their beautiful way of helping you have the security of a home, something stable, to put down some roots, to have a safe place that no one can take away from you. And they may have worked decades to build this money that they're giving you. So please, be transparent with them. Plan carefully and mindfully. And obviously, it goes without saying, which you're doing obviously anyway, but respecting their generosity. You're not just honoring their gift, you're actually going to hopefully multiply their gift. So they'll be even prouder and glad that they gave you this money, because you've nurtured it and you've actually used that money to help build your wealth beyond what they actually gave you in the first place. And that's something they'll be proud of, and you'll definitely be proud of as well. And you're showing them that you really do value their help so deeply, and that you're committed to using it in a way that builds that long-term financial security for yourselves as a couple, but also possibly for your future family. So, as I wrap up today's episode, I would love to hear from you guys as listeners. What would you do if you were in debt and your parents were going to give you some money? Would you be honest? Would you be strategic? Would you be thoughtful? As I said, this is so important that you pay this debt off first. You do the right thing and you learn from it. You speak with a mortgage broker and a lawyer, of course, before accepting any money. And you use this time right now to strengthen your financial foundation so that when that day comes to take the next step and buy your first home, you do so with so much confidence, so much stability, but also so much beautiful gratitude. You're not disappointing your parents here by being in debt. You're just making sure that their generosity becomes a priority of your family's legacy and not something that holds you back with your financial liabilities. Now, if this episode resonated with you, can you please go and share it with any family members or friends who might be navigating a similar financial situation? Because, the bank of mum and dad, it is complex and there's a lot of dirty laundry behind it as well. So it needs to be dealt with correctly. And if you have a question for me as part of Start Here, send me a DM on Instagram or you can send me a direct email and I will put it on my list and I promise I will make this episode for you. In the meantime, can you do me a massive favor and leave me a rating and review? And of course, I will see you on Monday morning for Sugar Mama's Fire Play and again next Friday for Start Here. Thank you, everyone. Have a fantastic weekend.